All right, guys, it's Paul Singh, the Market Speculator, with the trade report for Wednesday, November 20th, 2018. Basically, the trading day before Thanksgiving, and then we're going to have a half day on Friday. Um, Pretty disturbing action today. I got a couple of emails, and I want to comment on this before we get into the action and focus lists and all that, especially on a day where we're going to probably trade light going into the holiday. But I posted something on Instagram, and if you guys, I know most of you guys are following me. If you're not, the real Paul J. Singh. I got an email from someone who's a trade report member, and I got some other emails, which I always do. A lot of people frustrated with this market. A couple of the comments I got was, I hear your analysis all the time. I know we were supposed to be light here and not buying the dips and understanding this was a corrective market, but it was too tempting. I bought the dips anyway. Listen to what everyone else was telling me. And you have to stick to your analysis. We knew up here we got light. We've talked about this before. We knew to get light here because of market breadth. We analyzed the market on a pretty deep level, and we knew something was coming. We didn't know exactly when, and faced some criticism over that. But it's worked out good, and we've traded this period very successfully. And on these days where everyone got excited and started jumping into the market, and you can see all of these bounces have ended up failing, we were always cautious. We've had that analysis where he said we're not going to get too excited. We know these resistance levels have to break, and we have to see market breadth improve, and we weren't seeing that, and these continue to fail. It's not rocket science. It wasn't that difficult to spot, and we knew, okay, if it reaches this level and things start to improve, we'll change our attitude, but we haven't done that. That doesn't mean we didn't take shots. So if we look at the statistics here, going back to October, and I'll do another one of our mentoring sessions after Thanksgiving, and we'll go over the statistics and how we've traded this and what we're going to do in the future. But we were sitting somewhere in here around 21%, and through this really ugly period where people are getting crushed, we've gone from about 21, 22% somewhere in here up to 28% after today. That doesn't mean we haven't taken losses. I mean, look at this. I would say, I haven't counted this up, but I would say the win rate's probably somewhere between 50 and 60%. So it's not like we're crushing the wins, but we've known how to capture the big move, and we've had our big wins in these shorts. Our biggest wins here, SPX, SQQQ, SQQQ again today. We took 4 losses in a row, but they weren't big deal. 1,000, 1,000, 1,650 compared to 3,800, 3,000, 2,000. So this is the way you need to be trading during this period. And again, that we took our long shots too. I took 4 long shots, and obviously they didn't work. I don't want them back. I took them for a reason, because I knew we were positioned where if the market ran up, we would be positioned for that. So they were kind of like hedges. So it's okay to take these small losses. But the people who are just directionally going, okay, the market's turned here, and I saw some of that today, where people were saying, oh, okay, the market's turning today, when we were up here. And we were patient, waited till the end of the day. We got out of our SQQQ position, which I do wish I was still in. But the reason we got it out of that, we put a protective stop because we have to lock in the profits there. Once we're sitting on a gain that's 2,000 or higher for me, for you, if you have 100 shares, it would be 200 for you, whatever amount of shares you're taking. You have to lock that in. The 2 to 1, you have to lock in. So yeah, I wish I was still in now, because I do think we're going to test here, but that's okay. So the point of this post here was understand the market at a deeper level, which we do every day. Trust your analysis. Everyone here was getting bullish. We were not. Trust what you're doing. Don't let what other people are saying get you out of what you think. And don't even let me get you out of what you think if you think opposite of me. Adapt and act. So adapt is key. To be successful at trading, especially swing trading, you have to be able to adapt. For 2 years, the strategy has been buy the dips. Always. Continuation patterns, breakouts, pullbacks. Just play those, and you're going to be successful through this whole period in here. But the market has changed. If you're going against a brick wall and just continually trying to buy these dips and not shorting at the same time, you're getting crushed. So adapt. Know this is the market we're in. We have to do things differently, and then act. A lot of some of the emails I got were like, well, frustration was, I know what I'm supposed to be doing, but I'm not doing it. So you have to act on this analysis. Okay, so that's my little dialogue for today. Think about that. But now let's get to the market here. It looked like we might turn today, and by the end of the day, I was getting ready to potentially put on long positions because stocks like Nvidia here. Nvidia had some good news from Citron saying they were going to, who has been very bearish, decided they were going to start buying at this point. That they thought it was it's at a spot where it's valued correctly now. So that's a lot of the reason for Nvidia, and then these beaten down big techs. Netflix. Now Netflix closed here. When it was up here, it was looking very strong. It had turned green, looked like a piercing pattern, kind of continuation. Facebook was looking the same, but again, Facebook still looks actually pretty good here. But we wait till the end of the day, and by the end of the day, what happens in these corrective bear markets often, that intraday strength gets sold. And that's exactly what happened. So this is why we're waiting till the end of the day for these things. Doesn't mean tomorrow it couldn't pop, or maybe it continues down. I think we're going to continue down, but we don't know what's going to happen. And because of that, I didn't put on my shorts back. I didn't put my shorts back on. We're kind of in no man's land here now. So I think the best play is just to sit back and watch what happens. Ideally, what I want to happen is what we've been continually doing. That's wait for strength, and when the strength fails, short. That's where our gains here and our gain here, that's how they happened. We let the move go down. When that bounce failed, we get in, play this move, time it as best we can. You can't time it perfectly. And then wait for the next bounce. And that's what we did here. We waited for the next bounce and then initiated the next short right in here and came down and got out today. So I'd like to do, hopefully that happens again, where we get a little consolidation and another failure, especially if we test these February lows, which I still think are in play. If we could consolidate and then break down again, that would be our short play again. So that's the idea going forward. For shorts, we're basically just looking at the indexes like we've been. So again, that's SPXS, SQQQ, and TZA. And we'll even throw in the semiconductors, which are SOX S. And if we see reversal signals in the market, we can take any of the inverse longs on these, which are SPXL, and I'm not going to go through them. You guys know what they are. We talk about this every day. But now I'm going to give you a list. If we decide we are in a good bounce play, we're going to go with Nvidia, which is very strong. I think we could have even entered it today, but I'm a little concerned about the market still. But if we get confirmation tomorrow, regardless of the market, I might take a small shot in Nvidia. Problem is, it's a really wide candle, so we probably can't go all. I mean, if I take even just 100 shares, that's I need to put a 15-point stop. That would be a $1,500 loss, and I'm trying to keep my losses between 800 and 11 or 1200. So it's a little tough on the risk reward, but I think we could take a shot there. If Netflix continues here, if Facebook continues here, I've got a few others. The software stocks, Team, very nice candle today. And then Pacey, another one, very nice candle today. Cyber, not a nice candle, but coming into the 200-day moving average. And we'll keep an eye on Apple as well. There's really nowhere to go long here at this point, but we'll just watch it and see if there's some kind of strong reversal candle with Apple. And then obviously if it ever gets up here, we could go long. So that's the strategy. One other, SQ also was putting in a strong candle. If it gets over the 50-day moving average, that would be good as well. These are all still really good stocks. They were just so overvalued that they get beaten down like this. And then potentially there could be a buying opportunity. So that's the plan heading into the holiday. Unless something significant happens before the morning tomorrow, this is the report for Wednesday. Thursday, obviously no report for Thursday. Friday's a half day, and I'm traveling, visiting family in the Bay Area. So I don't know if I'm going to get the report out for Friday. If we are in any positions, just stick to the stops that I've listed. So that's the plan going forward, and then we'll be ready to go again on Monday.